Hello everybody. So today I want to discuss 7 platform stocks that I find particularly undervalued. And all of these stocks are growth platforms, i.e. they are going through vast waves of growth right now. So that's why many of these companies are newer companies. And if you're new to the channel, you know that I typically mostly care about the top line and the gross profit line on the income statement in the way I analyze stocks. I very rarely analyze stocks to the level of earnings or even EBITDA, because to me, at least earnings, by the time the stock reaches earnings and gets valued on earnings and on earnings alone, by the time we get a stock with a 15 times PE, that stock is not a growth stock anymore. It's going to be growing at the rate of the economy. And it's not the style of investing that I do. The style of investing that I do is a top line type of investing. I invest in product adoption. I want products to get adopted. And so I get in early and I leave as soon as there are signs of growth slowdown. That's my style of investing. And I have recreated a spin of the PEG ratio, if you will. So Peter Lynch's famous PEG ratio. I have this spin, which is the enterprise value over gross profit over revenue growth, which is kind of my version of a PEG ratio. And the goal really is for it to be under a 0.5. It's what I consider pretty good on this. Why? Because, of course, I'm dealing with gross profit and not earnings, right? Gross profit come way earlier in the income statement, and they are much higher. And I also use enterprise value because I want to penalize companies that have debt and remove debt out of the equation. But the goal here to deem a stock undervalued is to have this metric as low as possible. The lower you are paying for that future 1% of growth, the better. And so what this means here, when you look at any of these, is how much am I paying for that growth? How much am I paying for each percentage point of forward growth? And we can see that this is a spreadsheet that's going to penalize stocks that don't have very, 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 very large growth. In fact, Fiverr, technically one of the cheapest stocks out there. I mean, it's hard to find a cheaper stock than Fiverr. It's pretty cheap. But you see, my spreadsheet is not kind to Fiverr relative to many other stocks here. Why? Because it's only growing at 12%, right? So my spreadsheet is really going to advantage stocks that are growing fast. And let me just go through each of the platforms and tell you why I like them. So let's start with Airbnb. Airbnb is a top 10 position for me. I love Airbnb very much. I know it's not a stock that's really followed by retail, but I believe Airbnb has a tremendous potential for growth, both in the disruption of hotels. They're about at 10% in how much they've taken away from hotels. And they will take more from hotels. If you listen to the conference call, it's a company that I've been listening to calls for a long, long while now. And they will take more market share from hotels. They are the best cost, the cheapest solution for families to travel. They're the cheapest solution if you want any type of out of the box thinking type of traveling, right? If you want to move away from a hotel, Airbnb is the place to be. And I also fundamentally believe that Airbnb will be able to disrupt mom and pop landlords. And if they disrupt mom and pop landlords, that's going to be a huge deal. In fact, about 20% of the stays on Airbnb are long-term stays that are more than 28 days. That's 20%. How much is this going to grow? And one of the reasons why I love platforms in general and not just Airbnb is because platforms don't have to produce the product. They don't have to make a product. They just have to facilitate transactions by adding a layer of trust, a layer of convenience, or a formalization to the way the communication happens between two parties. They enhance the communication between parties. They create that trust, but they do not produce the product, which is why I believe over the long term, this is one of the most powerful businesses. It's one of the business where you manage the transaction, you have a take rate over the transaction, but you don't produce anything. Fascinating business, very much related to network and how networks work, and I'm very interested in the type of business. So anyways, let me move on quickly to another stock, which is Xometry, which is a stock that I've actually looked quite a bit at this morning, and I'm considering making a full video of Xometry. Xometry is a CAD design platform where designers of industrial parts, they'll typically have a computer-assisted CAD type file design, and they want to produce the part. And to produce that part, well, in the past, they used to call different CNC machine operators, different machining companies that were really spread out, really scattered across the country. Xometry is trying to be a platform between CNC machine operators, 3D printer operators, all of these machining specialists, which are typically scattered small businesses that don't have a consistent source of work. And it's trying to connect those shops, those small machining shops, to engineers who need parts and who need these parts quickly. So an engineer will typically develop a part like an AutoCAD design. It will drop the design on Xometry, and then Xometry will propose to them different suppliers that can machine that part. So it's a platform that puts machinists and engineers together. Very interesting niche. I have a hard time thinking how this could be disrupted. Of course, I'm not an industry insider. That's why I'll make a video on it, because I find out that when I make a video on it, I typically get very relevant comments. But to me, this niche is very interesting, and this stock is cheap. It is the cheapest on my metric, which is enterprise value over gross profit over revenue growth. I.e., we're getting, it would be the third or fourth cheapest when I do my general undervalued stocks with a video where I have 35 stocks. It would be the third or fourth cheapest. But it's a favorite business model of mine. I prefer this business model over, say, one-time sales, for example. I even prefer it over SaaS. It's a wonderful business model, and when you look at this, it's also the cheapest on enterprise value over sales. So, very interesting niche platform, and small caps are riskier, but a niche platform. Moving on to another niche platform here is ROVR. So ROVR, I've done a full analysis on ROVR. So ROVR is kind of an Airbnb for pets, Airbnb for cats and dogs. Again, ROVR, the growth of ROVR will be very much correlated with the wave of growth of Airbnb, because pet owners typically need someone to look after their pets, and when they need that person, it's when the whole family leaves for vacation. So what you find is that Airbnb and ROVR have kind of a similar, business. So it's almost to wonder whether Airbnb could acquire ROVR. I think it'd be an interesting question. I wouldn't like that, because I typically invest in stocks for the very long run. But nonetheless, ROVR is the same story a little bit as Xometry. They carved a niche for a platform, and those numbers look really, really good. It's an inexpensive stock. They're going after Europe. They're going to grow very fast in Europe. They're also in a growing field. Pet ownership is a major trend and a growing trend, and they're poised to capture some of that growth in the field that they operate in. So not only do they disrupt, mom and pop family members who would look after pets, and typically kind of a mom and pop, relationship business, a little bit like babysitters, right? Some people, they'll go on next door and they say, "Oh, I can watch your pet for $20 a day." ROVR is trying to disrupt that, but it's also doing that in a field that is growing with more and more demand and more needs, and it is a very cheap stock. We're paying very little at 0.15 for each percentage point of forward growth. So I like this stock very much. I've done a full analysis on ROVR on the channel if you're interested. Now, what about Fiverr? Fiverr, a darling of 2020, of 2021. People loved this stock. The growth was stunning, and this is one of these stocks where, unfortunately, the growth is just not there anymore. At 12%, you're not staying afloat if you grow at 12% for a business. I want my businesses to grow at least at the rate of monetary inflation, which the rate of monetary inflation is 15%. Right? That's where I want my stocks to grow. So you're not even growing at 15%. In my view, if you're not staying afloat if you're not growing at 15%. So this is a stock that is not interesting me right now, despite its inexpensive valuation. I would have to foresee that growth pick back up in the 30% range. And if I move to Instacart, so past 2 weeks everybody's been talking about Instacart. Instacart is kind of the same story as far as the growth goes. I had a hard time finding analyst estimates, but the best I could find was 18% growth over the next 12 months. Well, that's not very good. That's barely above my 15% monetary inflation number of 15%, so 3% more. That doesn't really excite me much, even though I will say that Instacart, I've looked at them today quite a bit, went on the website, etc. It's very impressive. I mean, it is very impressive. You in my area, I can get anything delivered from local grocery stores in about an hour and a half. I mean, it's an impressive business, and I think they've really cracked the coda of something very, very nice. Of course, people say there's the threat of things like Walmart Spark, for example, and Walmart Plus, which allow Walmart to deliver on its own. But that's true for chains. But Instacart really seems to shine with a lot of independent grocery stores, which will never have the kind of delivery army, I'm going to call it, that say a Walmart or a Kroger can have, right? Kroger and Walmart, they can do their own delivery team, but in the U.S., grocery stores are oftentimes very scattered, right? You can have towns and they have 30 grocery stores of one brand. There's not one major chain aside from Walmart and Kroger. So I think they have a very interesting positioning, but that growth is just too slow for me. It is just too slow for me, and you would expect a stock like this to benefit from, say, things like inflation, right? Because this is a take rate business, so you would think inflation would benefit them, but no, that growth is just too slow for me, so I would not be interested in Instacart. And then let me finish with, frankly, the two surprises of this spreadsheet, and these surprises are Doordash and Uber. So if you're not in the US, Doordash is the equivalent of, say, a Deliveroo in Europe. Like, I don't know, Deliveroo I hear is pretty big in Europe. So Doordash would be the US equivalent of that. And that stock to me is actually pretty cheap given its size, given how much revenue it gathers right here. I mean, that's almost Airbnb style, Airbnb-like as far as revenue goes. It's cheaper than Airbnb. And what I like very much about Doordash is that, unlike Uber, which may be in the crosshairs of disruption if robotaxis become a thing, and it would be a binary event. We don't really know yet. I mean, Tesla is my number one position, so I believe taxis will become a thing one day. And if it's not by Tesla, it might be by someone else. So that's why I'm a little careful with Uber. But Doordash doesn't have that issue. Doordash is food delivery. I think we're still gonna need humans for delivering food and knocking on your door and giving that personal attention when you drop the food at someone, especially true in downtown setups, downtown settings. To me, Doordash is not as much of a risk of disruption than Uber's core business, Uber's main business, and because of that, I find this valuation very interesting at a 47% gross margin, so much better than Uber. And again, this will increase as these companies mature. These gross margins will increase, and revenue growth is at 36%, so that's the same as Uber right here, which is very interesting. I like this stock, so let me know what you think about Doordash in the comment, and let me finish with Uber. Uber, same story as Doordash. In my view, it's very impressive. It's growing very fast. Uber is really seeing growth from deliveries because who's the main competitor of Doordash? The main competitor of Doordash in the US is Uber Eats. Uber Eats is the main competitor of Doordash. So both of these two kind of compete with each other. But I can't forget the fact that the bulk of the revenue for Uber is still rideshare and ride sharing. And that, to me, when I analyze stocks from a qualitative standpoint, it is at risk of disruption. And so that share of the business could be really taken away from Uber if the full self-driving code is cracked and if robotaxis become a thing. So there is a major threat of disruption that I do not find on Doordash, and perhaps this is reflected when you look at the enterprise value over sales, because Uber is quite cheaper, like a good third cheaper than Doordash because of that. So I would be worried about Uber and that disruption, and it would be odd to have Tesla as your number one position, and believing in the robotaxi thesis. I just don't believe in the timeline. I don't know when that's going to happen. I don't know if it will be 5 years or 10 years or 1 year from now. No idea. But I know it's in the future. And so that creates a tremendous binary overhang on a stock like Uber, which is why I would stay away. But nonetheless, the title of my video stands. All of these stocks in my spreadsheet look very, very, very cheap. I mean, it even makes Airbnb look expensive, which if you follow the channel, Airbnb, when I do my top 10 stocks video, it's not that expensive. So anyways, very interesting stocks. And let me know which one you would like me to cover or give more information to on the channel. I will likely be looking at Xometry a little more. But let me know if something like Doordash, for example, interests you too. Thank you so much for watching. This is just entertainment, as always. Never any investment advice, no investment advice. I appreciate your likes. Please subscribe to the channel. Thanks for watching. Have a wonderful day.